Ira Epstein of Linn Associates with your financial market wrap-up, and this is for Thursday, the 30th of May, 2019. We're just getting on to 3:30 in the afternoon. I wanted to catch this before the market started trading again. These will be where the settlement prices come in. They're determined at 3:15, and then the market reopens from 3:30 to 4 o'clock and waits an hour, and then the 5 o'clock time frame comes and we're into Friday trade. But as you can see, a late day recovery did occur in most of the stock indices. The weakest remains the Russell. Gold stood up today, had a big reversal day to the upside and held some very key areas. Looks okay on the chart right now, at least from a from a charting point of view, not fundamentals. And in the dollar index, another small up day, in fact, there. So let's go, and by the way, let me come back here. Look at how hard the energies got hit. What basically happened there was the EIA numbers came in with, yes, a decline, but just so small of one. The market needed to at least see what the API number was yesterday and get up to that number of near a 4 million draw. Didn't get anything like it, and you feel the pressure that came through. Same in nat gas. It too seeing a build in the market, and that's because temperatures, while we've had a lot of rain, the temperatures are quite mild in most of the U.S. I know the South is different, and I'm aware of Arizona. Believe me, I know how that works. Went to school in Arizona, so I know it. When you look at the S&P 500 index, you can see how this market came down. And the market is down for the week right now, about 11 points on a weekly basis. It's in a corrective mode. Today was on a daily basis, an inside trading day, so it's a pause in the market. That's how many analysts look at it. The trend remains with a pattern of lower highs, lower lows. I'm sure many of you are tired of hearing that, but that's what makes up a trend. If you have a lower low and a higher high, you're not in a trend. And if you have higher lows and higher highs, you're in an uptrend. And I teach all that in my charting course. You're going to want to stay around after this for me to tell you about that, because the sale's coming to an end tomorrow. And when that sale's over, it's not going through Sunday. That's it. The price is going up in the course. On top of it, you lose the sale price, and then I'm raising the price of the course also. So as I'm looking at the market, lower highs, lower lows, the market did what I was hoping. That's all it was. As a chartist, you look to see, are your numbers making any sense? It has nothing to do with getting right, wrong. But I was looking for the area of support to be the 100-day average in green, and then the gray line, which is the 200-day average. It did both of those. It held that zone. For a kicker, the Bollinger Band came in right there, and the market held that. That doesn't mean it's going to continue holding it. What it means is this support level showed as it should. Should this market, for example, decide tomorrow to get under all of this and make new lows for the week and close lower, we'll be talking about this market running the lower Bollinger Band, and the question will then be, can you get an embedded reading? If you'll notice, both numbers are going to be today on the settlement under 20 for the first time. Let me come back to that. They weren't that way yesterday. So your day one of trying to embed. It also means you're the most oversold and into a support area where I think pros took money off the table. When you come to the NASDAQ, if we come back to yesterday, we had gotten down to the 100-day average, the 200-day average, the green and the gray, then the Bollinger Band, and today the market's just hanging right in there. Now, how many days do we have down under a 20 level here? We certainly have today. We had Wednesday, and we had the day before. This is now called embedded. So you've got your embedded reading, which means on the rallies, until the red line closes back over 20, I think the pros are going to be willing sellers of the market. When you come to the Dow, I see an oversold market that went to its lower Bollinger Band. It's the only number that was left because you had already been through those other numbers this past Tuesday. So that left the Bollinger Band a challenge, which it did yesterday, and it popped back over it today. So at least in the sense of being a chartist and saying, okay, I can see some numbers that are trying to offer support, we're there. The market that, in my opinion, is still very weak is the Russell. It's got an embedded reading as well. It could get a bearish crossover where the 18-day average of closes in red gets underneath the 1541 level, the 100-day, and that would be another crossover. And by the way, let me give you an idea how bearish that would be. You would then have the 200-day, the 100, and under it, the 18-day. So you'd have what's called the perfect bearish lineup in moving averages. That doesn't mean the market has to collapse. It means that on rallies, this market's going to have serious issues. In the VIX, the market came back down here to the 18-day average and hung there. The trend is still up. Higher lows, higher highs, support right at that 18-day average. If the market falls from here, another level of support could be the 100-day average, and resistance, the upper Bollinger Band. Now, if you got to the upper Bollinger Band, I would expect to see call writers show up in the market. We'll see if that's a right idea or not. T-bonds, embedded reading, so you know I'm bullish on the market. Riding the upper Bollinger Band. You get under, you get over, you get back and forth. You're just pushing this market out. How low can it go? Don't know. We've already heard from some. Jeff Gundlach was saying that he thinks this is the blow-off phase and that the market will go the other way. In other words, yields go back up a little bit here. I don't know. Until the chart turns, I don't think so. When it does, one of the things I'd look for is today's low. If today's low is taken out Friday or Monday, then I would say the market has made a peak case. But what I want more than that is I want the Bollinger Band, and that's Bollinger, slow stochastic, the red number, to get under 80. That would tell me that you might be making a move back towards that 18-day average of closes. I've got the bullish embedded reading here. I don't have the outside day up the way that I do in the bond market. That's a stronger market than we're seeing here. This is just riding that Bollinger Band with the embedded reading. Until the red line closes under 80, I say the pros are still going to buy the breaks in the market. TLT is pretty much the same way, riding with an outside day up. If today's low were taken out, I'd get concerned. Then it would be a potential bull trap. But this market has had the longest embedded reading of everything, and it just doesn't back off at all. We then get to the dollar index, where I say that the resistance is the upper Bollinger Band. And you can see you got to it yesterday, you went to it today. You're maybe going to finish up on the day a couple of points higher. You're overbought. Can the market push itself out here or not? And it's the flip-flop in the euro. You got down yesterday to the Bollinger Band. You're riding it right now. You're not able to get away from it. You are in oversold territory, not trending. You have the lower low, higher high. If we go to the dollar index, you have here the high that is higher there, the low that is lower there. So one of these mixed type pictures. The British pound's different. Bearish. All fronts, lower highs, lower lows, embedded reading. Until that embedded reading is lost, I have no reason to think that the bears just don't keep control of the market. In the Japanese yen, if we come to yesterday, we probably were saying that if the market breaks, the combination of support at the 18 and the 100-day average should be what the market tries to hold. It's what it did today. It did a job of holding it, but you're getting a little divergence here. You're getting momentum waffling, flirting with trying to turn down. The numbers, as you can see, the red is under the blue. The second thing is I've got lower highs and lower lows. So I realize I'm in a support zone, but any close underneath that 18-day average, ideally under today's low tomorrow, could be a problem for those that want to be bullish this market. Now, this is the May Bitcoin. It expires tomorrow. So you're going to want to start moving to the June as of tonight, but I'll finish up at least saying that you've still got the pattern of higher lows, higher highs, but the market today got down to, what was the number? 83.45. You took out 84.20. So as much as the market made the highest high of the move to 91.25, it is, from the looks of it, an outside day down, a key reversal day, and until today's high is taken out, if you lose the embedded reading tomorrow, then I look for price in the 18-day average to make a run at each other. In other words, the market to come down and maybe consolidate a bit. Start moving now. If you're going to do the spread of Brent versus WTI, move to the August contracts because the July goes off the board in the Brent now. So you want to get to these two, and you can see it got up around the 930 level. Let's see, just see what that high is. 932, and it's had a bit of a correction over the past few days to 851, but the bias will remain up as long as you're over the red line, which is the 18-day average of closes. When I come to August Brent, and I might as well move there on the daily chart now, lower highs, lower lows. Now, as you can see, you're trading here at 65.20, well under the 100-day average and the Bollinger Band. You're not even paying attention to those numbers. You did yesterday. You just sliced through everything today, and now the question is, how low is low? Obviously, if you want to support this market, all that the Saudis have to do with the Russians and say, nah, we're not going to pump that additional amount we want. We'll see if the market comes up. That's the force that would have to counter global slowing. And that's what everybody is seeing. And I'll give you the scary thing. This market is probably built in the Chinese PMI, which will be released, I think it's tonight. And that's when the markets here will be pretty much finished. When we see that, we'll get an idea of how they say they're slowing down. Our numbers that keep coming out, while we slow a little bit, they're still looking phenomenal. So the U.S. economy is still looking good. It's contrary to what a lot of people might have thought. In the July WTI, you got up today over the previous high. So what I've got now is a market with a big outside day down, under the Bollinger Band and oversold. Very similar to what's going on in the Brent. And you can see yesterday you came down. Today you tried that bounce, couldn't go anywhere with it, and just collapsed by the end of the day. This is a big decline. Anytime you're down nearly 4% on a day in one day, that's a heck of a decline in a market. Rebob gasoline. Yay if you're going driving in June, right? Because you're down today alone 3.5%, nearly 7 cents a gallon. The market's in a downtrend, but like the other parts of the market, oversold. What if the Chinese PMI comes out with strength? That would be a surprise. Probably give these markets a bit of a bounce. And natural gas doesn't pay attention to that. It's a weather market. And you're always looking to see when's the hot weather coming. It hasn't come. We've had these unbelievable rains that have impacted everything, and we still see that we're not pulling out of storage the amount of nat gas that you would if you had a typical warm May, late May, June. We're not like that. I keep wearing a jacket to work. I mean, I go to work, it's 50 degrees, 55 in Chicago. It warms up, but it doesn't get to 80. So just think of a big city like this and then multiply it on the East Coast, what's going on, and you're not using it. But you're down to a point where I think the pros did cover. I want to remind you about the charting course. This course is normally $169.95, and I'll tell you all that's in it. It's $99.95 through tomorrow, and that's the ball game. Now, what I do is I teach via rote. You see what I do, then you do the same thing. And what a lot of people don't do right in the courses I've taken, if they're doing videos, you can't be today if you're making a video and teaching it. So I go back a little bit in time. I provide that data in our charting software. Now you can do exactly as I do. And I really believe in stepping ladder approach. You know, when I went to school, the key to me to finally becoming a reasonably good student was understanding I shouldn't turn the page if I didn't understand what was on the page. And I stopped having to cram and everything. But of course, you don't learn those tricks early on. You start learning them later in life. That's the key. So I want you to take it step by step. I'm going to teach you how to do things by hand before you even use your computer. If you can do it by hand, you understand the computer technology is going to do it for you. You don't have to do that. So we're going to teach you swing lines, just how they draw, how they work. Next, I'm going to take you to moving averages. And what you see here are just a few of the averages that I use, but I'll show you the tricks that I believe are involved in them. Slow stochastics, this is where you're going to learn embedding. You're going to learn overbought, oversold, divergence. How does that work with the market? Bollinger Bands, are you running them? The first time you hit them, what do you do with them? How are they plotted? What do you do and how do you plot them and put them on your chart and read them? And then window envelope, something you never see me talk about here. And the reason isn't I'm hiding it from you. It's another set of lines, sometimes 6 more on a chart. There's only 5 different indicators. You're going to read the roadmap just like you would if you're driving somewhere. You look at your app and it says gasoline station around the corner, ATM down there. That's the idea. Get you to the point where you have access to the 54 videos. It's 6 hours of videos. You should be able to complete this course in a short order. 2 weeks. And I mean, that's really learning it, maximum. Do a chapter at a time. It's pretty simple. Then, you go and you're going to get my morning research. What the research does is it reinforces each day what you're learning. So let's assume you're on swing lines. You're going to see me talking about swing lines. Let's assume you get to the Bollinger Band course. You're going to be right there. And of course, you're going to get our charting software to go with this, assuming you haven't used it in the past year. If you haven't, because we don't own that software, then we have a problem with our vendor. But if you haven't, it's fine. And we have 2 different versions, so just about everybody's fine. As I said, the course for the holiday pricing, $99.95. Then it's going to $179.95. You can see our phone number. You can always go to our website, go under the word education. There's a whole section there that explains this before you ever commit to it, and it's really simple. Let's assume you want refresher time down the road. We even make that available in the course. It's all online. So nothing in the mail. You can go from it from different areas, and I think you'll find that it's really interesting to do. I'm Ira Epstein. Sorry for talking so long. You have a good day, and I'll see you tomorrow.